I was able to grow a 5K account to over $100,000 in about 8 months last year. It wasn't just based off of one lucky trade, but it was based off of showing up every day, excited, ready to execute, and trading to the best of my abilities every single day. The point of this video is I want to be able to show you guys the guidelines that I set for myself that I still follow to this day to grow this small account and show you what's possible if you try your best every day and put your utmost effort every single day. So let's start off with the proof, because nowadays everybody just says things and they don't want to show any type of proof. So I'm going to start off by showing two things. One, it's the day-to-day account balance. It's going to be a quick scroll through. And then two, the actual live login P&L to show that I didn't just deposit money into the account, that it was actually me trading to take the account to 100K. And while that's showing, shout out to Brando. Learned everything that I know about trading because of him, his methods, his mentality that he gave on to me. Really appreciate everything he's done for me and taught me. Wouldn't be here without him. Now that we have the proof out the way, let's go over a preview of the 9 things that I'm going to be covering. So 1 is protecting the account before growing it. 2 is building a cushion. 3 is trading one setup extremely well, and it's going to be covering the break, retest, break strategy. 4, trade selection. Fewer trades is actually more. 5, understanding momentum when it appears and when to really press when it does appear. 6, remembering your bottom line every single day. 7, preparation is key. 8, the mental aspect of growing an account and just trading in general. And 9, enjoying the process whether you're winning or losing. Guideline number 1, and probably the most important, is protecting your account before thinking about growing it. So there's 2 parts to this. 1 is, what does your account mean to you? When I was growing the $5,000, I really didn't care much about it. If it went to 0, I'd be completely okay with it. Now, for other people, that $5,000 might mean everything to them. It might be their last savings that they have in their account. And both are completely fine, but you have to have realistic expectations depending on which one you are. If you're the person that you're completely okay with losing it, your growth trajectory is going to be a lot faster. Your exponential curve is going to come a lot quicker to that hump where things get exponential. As opposed to someone who is putting their last life savings into the account, you're going to be a lot more risk averse and you're not going to be able to take on risk as comfortably as option number 1. Your exponential growth is going to happen a lot later compared to somebody who's completely okay with losing that amount. That is what I would say you need to ask yourself first. What are you willing to lose? And are you honestly willing to lose it? If you're not, then you might need to reassess a bit. Now 2, once you figure that out, it becomes a game of survival. Can you survive long enough to where your edge plays out and you can grow your account to that exponential point to be able to grow it in a very fast pace? That comes with not letting one trade blow up your account. I see this all the time. People don't protect their accounts. They become too risky, either due to cockiness or because of ego. But this is very crucial if you want to grow a small account, because your room for error is very small, because you might have 1 or 2 trades that aren't going to work out. But being able to survive for your edge to play out is key to growing your account to the point where you get to that exponential point, easily sail through and get to that 100K mark. Guideline number 2. This builds upon what we just discussed about surviving long enough until your edge hits, but you need to slowly build a cushion when you're first starting off. So whether you have a small account or a big account, building a cushion gets your mental fortitude completely correct and able to take risks when your edge presents itself. So what do I mean by this? A lot of people's cushion are very different. For me, I was able to take excessive risk after I 2x the account to 10K, and I was able to take more risk in terms of position sizing and holding my positions a little bit longer. For majority of people, they need at least a 10 to 15K cushion if they're starting with a 5K account before taking excessive risk. And what that cushion allows you to do is basically take some of that profit and put it into a high probability trade that you've been waiting for a very long time. For instance, if you look back at Tesla 363, that has been a level that has been rejected over and over again. When that broke, it ran 60 points. So if you threw in 3 to 5K out of that, say 15K profit threshold that you have, you were able to take that 3 to 5K to about 10 to 20K if you were able to hold onto majority of the ride. So that's what I mean. Build a cushion first and then take on excessive risk, or not excessive, but more risk to grow the account and get to that exponential point. Guideline number 3 is trade one setup extremely well and learn it very well. Many traders try and learn 15 different types of trade setups. For me, I just stuck with the break, retest, break strategy. Whether or not you want to use the break, retest, break strategy or any different strategy, there's a million out there. Figure one that works with you where you're comfortable taking trades based off of that type of setup and learn it very well. What I see a lot of people doing is they learn 15 different types of trade setups and try and trade around all of them. Nobody's smart enough to be able to trade 50 different types of setups. Stick to simplicity. For me, it's the break, retest, break strategy. And let's actually go over what that is. So a quick example of the break, retest, break strategy that I took was Meta back on June 2nd. So as you can see, this chart, we're forming higher lows each and every single time. On this day right here is when I took a trade. I believe I took the 620, 700 calls. So about 2 weeks out on Meta near this key 663 level. Main aspect of the break, retest, break strategy is you need to be near a key level. And the 663 level was a key level. As shown, we rejected here once and we showed a lot of strength when we broke through the first time. We broke through, retested, and then saw continuation. There's honestly 3 entry points that you could have got into. You could have got in on the first break right here, which was the initial break, the retest, which was the next day, or the break of the high of the first break, which was the second break of the break, retest, break strategy. This is just one example of a trade that I've taken to grow this small account that I've done a dozen times, and I still do to this day in my main account and in my small account. This is basically the bread and butter that I follow. You could take the first break, which usually you want to size up on. You could take the retest, which you want to typically size down on, or you could take the high break of the first break to see a continuation move. Guideline number 4, trading less is actually more. I see many traders misinterpret this when they're first starting off, that they need to trade every single day to be profitable. That is far from the case. Your edge is not going to show up every single day. Sometimes it might be a couple days, maybe a couple weeks, sometimes even months. It just depends. But you need to be disciplined enough to wait until your setup is actually there to actually take the trade. Being able to wait for those key trades allows you to really size up and have more conviction on the trade. Now, if you take every single trade that's in front of you, you're never going to have conviction on any of those trades. So why not for quality over quantity of trades and maybe size up a little on those trades to have more quality? So this brings me on to guideline number 5, which is understanding momentum and knowing when to press size. There's about 10 to 12 weeks in the market where everything aligns perfectly. Now you might be asking, what conditions tell you that we're in that state? Well, number 1, market context. Are dips getting bought up on the indices, such as SPX and QQ? Number 2, is a stock that you're watching near a key level, like Tesla 363? Number 3, is the stock that you're watching have relative strength compared to the overall market? And lastly, market news. Is there some sort of news revolving around the market that is bullish that is pressing the overall market to move higher? You'll be able to easily tell if the market has momentum if everything is starting to move in unison, and your only job will be to pick the name that has the most relative strength. I'm sure you've felt a couple of times in your trading journey where everything just felt easy and everything was just working very well. Well, have you ever asked yourself what conditions were present when that happened? More often than not, everything was moving together in one unity, and it was very easy to just pick out which names were breaking key levels and seeing hard hold continuation move. Guideline number 6 is knowing your bottom line. So this is pretty much just on a daily basis being aware with how much risk you're holding on overnight. Now this matters more as you build the cushion and you're trading with that cushion, because a lot of times I see many traders get very hype with themselves because they had a very long winning streak, or they just feel like they're on top of the world and start taking on excessive size. It's very important, even if you have a bigger account or smaller account, it doesn't matter, that you're always looking at, okay, I have a $20,000 account. I have $5,000 worth of risk in place right now. If it all goes to 0, I'll be back at 15. And it's important to look at that on a daily basis, because sometimes you realize, hey, I'm already up 30% on my position and I'm carrying $5,000 worth of risk. Maybe I should just take off a little bit more to reduce my risk exposure going into the next day. Guideline number 7, probably the most important thing that I can mention, yet everybody fails to do this. Preparation is key. People want to become full-time traders, want to become profitable, but don't want to put the work into it. You need to have a system involving what you're doing pre-market. You can't wake up 5 minutes before open and expect to be consistent. You need to have a system revolving how you're executing trades when things align and when your setup hits. Can you execute within 10 seconds after your setup hits? Or are you on your phone trying to get everything ready and then execute and having a 20% lag period? And then 3, what are you doing post-market? People either do one thing and then do 2 other things, or they don't do any of it. You have to have everything aligned in order to do this consistently. It's not a short-term get rich quick thing. You need to play the long game, especially when you have a small account. You need to focus on the long-term picture, not what you're doing in 1 week. If you can be consistent in the systems that you build revolving your trading, your percentage of succeeding increases substantially. Guideline number 8, the mental aspect of trading. No matter where you are in your trading journey, this is always going to stick with you no matter what. The one rule that I learned the past 7 years is whatever you come in with the market is what you're gonna get out of it. So if you come in with a bad attitude or you're angry from the previous day, your trading is definitely gonna reflect it. That's why I always suggest meditating before the market opens for 3 to 5 minutes, just to get yourself prepped and ready and a mind of clearness to take on and tackle the market on a daily basis. This is a long game. It's not a short game. So if you treat it as, hey, I need to make X amount of money in a week, you're not going to succeed. The people who really succeed understand that what matters is their end of year P&L, not their weekly P&L. I see a lot of people flaunting their weekly P&L. That doesn't really matter. What matters is what did you produce at the end of the year. So understand, yes, you might be down 1 week, maybe 2 weeks, but you still have X amount of weeks until the year ends. The game is not done. If you can keep that confidence in your mental in check, no matter the turbulences that the market provides, you will succeed long term. Another mental aspect of trading that I learned the past 5 to 7 years was understanding whether it's fear talking or if it's logic. A lot of times you're going to be put in positions where your position is actually down 40 to 50 to 60%, but sometimes the chart isn't reflecting that and it's just the time decay. Now, are you able to stomach that loss and hold it because the setup is still apparent, or are you going to exit because your position's down and you're scared? A lot of times people get scared and exit their positions early for a loss just for it to work out 3 days later. It's very important that you understand, hey, is this logic speaking, or is this just my fear of losing and not being able to hold? Last but not least, probably the most important thing that I already talked about was preparation will clear your mental fog. Sometimes when the bell rings, people tend to forget everything. And the reason why is because they haven't prepared enough all the scenarios that are going to be presented right at open. Things move quickly at the open, obviously. Did you think about multiple scenarios? Are your levels marked? Are you ready to execute within a 10-second notice? A lot of people can't say that. If you ever feel mental fog, which I know a lot of newer traders have a lot of information overload, spend more time preparing, because that will build your confidence and your execution skills will show just as much as you prepared the night before and pre-market. Last but not least is enjoying the process, whether you're winning or losing. The best traders that I see out there, they are happy just to participate in the market, whether they're winning or losing. And having that mindset is so important. As I mentioned before, in the mental aspect of trading, I show up every single day. I don't know what to expect. All I can tell myself is I'm excited to trade and learn about what's going on in the world, how the markets are reflecting that, and 2, that I'm going to try my best. No matter what opportunities are presented to me, I will give it my all and execute as best as I possibly can. A lot of traders can't say that, and it's just because they just want to make money. If money is the only thing that you're attracted to, the market might not give it to you. But if there's external factors that come in play with your trading, that tends to play a big part in you succeeding. So that covers the 9 guidelines that I follow still to this day that I've learned the past 9 years that helped me grow this small account to over 6 figures. Just some ending thoughts that I want to leave with you guys. Build a system around whatever you're doing. It doesn't matter if it's just trading or whatever it is in your life. Building a proper system routine is the first step in becoming a profitable trader or succeeding in anything. So sit with that. 2, anybody can do it. Taking a small account to 100K is possible. Anybody can do it, but you need to believe that you can do it first. The mental aspect of trading is so important. If you don't believe that you can do it, then how are you going to expect yourself to do it? You need to be so prepared and sometimes be delusional that you can do this. Some of the most successful people that I've met, they are so delusional that their delusions actually come true. When I was telling myself and my friends that, hey, I'm gonna make $10,000 to $20,000 a day, they thought I was psychotic. Fast forward 2 to 3 years, they see me doing it and now they're asking, how do I do it? And not calling me crazy. So be delusional, but not too delusional. You wanna be within the means of delusion. The last thing I'll leave you with, understand your why. A couple years ago, Brando did a Sunday call specifying you need to understand why you're doing this, whether it's for your family, whether you want a better life, whether you want to pay certain bills off. Understand your why. For me, it was family. I was put in a lot of circumstances that I didn't want to be put in, but in order to get us out of that hole, I had to lock in and really put it in my all into the market to get what I have received out of it. Understand your why. It'll keep you going even on days that sometimes you don't want to show up. Even for me, sometimes there's days where I don't want to show up. There hasn't been a day where I've missed. I've been consistent with the market almost every single day. I'll leave you guys with that in another video, a more technical background on how to grow a small account and how to trade in general, specifically with the break, retest, break strategy. So if you like this video, please leave a like, comment, and subscribe. Obviously, this is my first big video that I'm posting on YouTube, and so just take it easy on me and give me any feedback that you guys think is worthwhile. Appreciate you guys, and I'll catch you guys later. See you guys.